All right, we're back with another episode of the Real Estate Investing Club. As always, Friday energy, bringing it to you guys. It is Friday. This is we always record 3 episodes every Friday, and then you guys get to listen to it through the week. But this is the last one, and it's going to be an interesting one because it's a topic I think we might have brushed on at one point a long time ago, but it's definitely unique. It's a unique strategy and a unique topic in real estate. We're talking about marijuana and its orientation in the real estate industry, and we have Chris Reese with us on the show to talk about it. He is the founder, chairman, and CEO of MJ REIT. And they have a ton of experience. He has a ton of experience, over 29 years of experience in the asset management space. And right now he is in the cannabis sector. So, Chris, I'm super excited to jump into this. Thank you very much for hopping on the show.
Hey, Gabe, thank you. Very excited to jump into a bunch of different details. And I think your audience will find this discussion intriguing and timely for sure.
Sweet. So I told you before we got on here, we always like starting with stories. We like to hear how people got to where they are because everybody has a unique and usually pretty interesting one. You've been in the field for 29 years, so I'm sure you got a good story. Why don't you tell us how you got here?
Yeah, absolutely. And so been in asset management for 29 years, half of those on the public side, working for large index shops like Vanguard, Hartford. And then 14 years ago, I noticed that while public equities and bonds were great for an investor's portfolio, looking at private assets that have different volatility characteristics, different diversification benefits, and enhanced returns, or the potential for enhanced returns. So I got involved in the private markets 14 years ago. Happened to join a firm that launched the first private BDC, which is simply stands for Business Development Company. It's a way to facilitate the flow of capital to smaller private U.S. businesses. And when I left that firm three and a half years ago, I looked at why those strategies were so successful, and I researched infrastructure, crypto, oil and gas, and I kept coming back to cannabis as a unique space that offers. Number one, cannabis is one of the fastest growing areas within the U.S. economy. Number two, it's got limited bank participation because cannabis is still illegal at the federal level, and you have limited amount of
Really? Sorry, I don't mean to jump into your story, but I thought it was legal. It was descheduled or whatever the term is. I thought it was.
Yeah, that's pending, but right now. Cannabis is a Schedule I controlled substance, which is the same in the eyes of the law as cocaine and LSD. So because of that, you can't go to a bank for a loan. And if you think about it, in real estate, what's vital for the industry to actually exist and thrive is the access to capital. And that's across the board, regardless of industry. But because the cannabis market is illegal at the federal level, banks won't touch it. And that creates the opportunity that we're seizing in the market. And this isn't a 20-year type opportunity. We look at it as a probably 5 to 10-year window where we can earn outsized returns and better risk-adjusted benefits for our investors. And so I launched MJ REIT really to take advantage of the opportunity on behalf of accredited investors. So we don't focus on institutional large 10, 20, $30 million checks. Our goal is to make this strategy available to accredited investors on a national basis with an investment as low as $25,000.
Wow, great. Yeah, and it makes sense that there is such a good opportunity because I didn't realize it was still illegal on the federal level. So yeah, banks, you can't get a loan. And that's one of the crucial elements in real estate is to be able to go out there and get those loans to help you close deals. So let's talk. I mean, I'm going to be speaking from kind of a naive or less knowledgeable, I guess, perspective because I don't know a lot about cannabis and the industry and how it relates to real estate. From my perspective, there are 3, I guess, elements that touch the real estate sector: is the farms, the distribution, and then the retail. Those are 3. I would assume 3 separate type of structures that you would buy and invest into. So tell us a little bit about cannabis, when it
Yeah.
comes to real estate? What are you investing in? And how do you underwrite them? Just kind of give us the overview.
Yeah, absolutely. And interestingly, although cannabis is illegal at the federal level, it's legal in 39 states, DC, and a few US territories. And every one of those 39 states has its own unique program. So
Mm,
just because you grow cannabis in California, you can't cross state lines. So every one of those
interesting.
states needs to have its own grow houses, its processing, as well as dispensaries to distribute to the consumer. And kind of weaving in a little bit more, some states are medical only, while some states have a medical and adult use program.
Yeah.
And what's
In
fascinating,
Washington, it's like
oh
there's a
yeah,
dispensary on every corner. It's crazy.
well, and it's interesting because in the state of New York, which legalized a few years ago, they've been marred in legal suits, but there was a time where in Manhattan we had three legal dispensaries and close to 4,000 illegal dispensaries. Which,
Oh, wow.
if you're a legal operator, how can you compete against somebody that's not paying tax and undercutting your price?
Yeah.
But specific with the real estate, and this is where it gets interesting because AI, you can't grow this in space, right? You need a property to grow it, you need a property to process it, and you need a property to sell it. And because you can't transport across state lines, there's an enormous amount of demand for these specific avenues within the real estate side. So we focus really on two areas of the commercial real estate market, which is industrial as well as retail.
Mm.
So on the industrial side, think of large grow houses that might cultivate, cannabis 20, 30, 40,000 square feet. And then on the dispensary side, we've probably all had the opportunity at least to walk by a dispensary. And those are a little bit on the smaller side. They're akin to, think of a coffee shop, but one that dispenses cannabis instead of coffee. And so that creates an enormous amount of opportunity for us as one of the few lenders in the market. And I mean, when you think about the rates we're putting capital into the market, I mean, we're lending on a 2 to 4 year senior mortgage, and I'll get into the loan to value in a second. But 2 to 4 year senior mortgage, and we're putting money into the market anywhere between 13 to 17%. And while that seems high in a non-cannabis area, that's actually on the lower side of what you can borrow for within the space.
Wait,
And again,
13 to
it gets to that zero
17%
banks.
interest
Yeah,
on the loans for
yeah.
so and that is that's kind of where I'm getting hung up is
Mhm.
these on the real estate side, everything that you mentioned, industrial retail, those aren't cannabis specific. I mean, if you buy a retail space, it doesn't
Mhm.
have to be used for cannabis. And so
Correct.
what would prevent somebody just consider any retail space? Why
Yeah.
can't somebody just go and buy that and then later turn it, lease it to a cannabis tenant?
So
What
yeah, there's yeah,
sorry, keep going.
100%. So there's a huge barrier to entry in that everything is regulated at the state. And
Mm,
so let's say you go open a dispensary at 123 Main Street. I may not, from a state regulation standpoint, be able to open another one across the street because they're limited. Some states have unlimited, some states have limited amount of license.
mm,
And then in addition to that, you have to get approval by the state to which piece of real estate that's going to be tied to. Obviously, you can't have it next door to a school or a church. So
mm,
there are
mhm.
certain areas that you can have the dispensaries, and there's certain areas that you can have the industrial warehouses for the cultivation. But we don't touch raw land. We won't go to think of up in upstate California where there's huge fields where they're growing cannabis. To us, and what sets us apart is that we assume cannabis goes away in every transaction. And so when we look at a piece of real estate on the industrial or retail side, we assume, let's say for an example on the retail side, that I need to replace that dispensary with a Verizon or a Starbucks. And then what
Mm.
could I lease or sell that building for? Because what happens is when you get a license to either grow or sell cannabis, it's tied to that physical address. You can't just pick up your license and move across the street like you could if you had a coffee shop.
Oh,
So when
okay.
you get that tied to that specific piece of real estate, the value of that real estate goes up because the highest revenue per square foot is in the cannabis space. But again, our risk mitigation, and this was what differentiates us, is we say, you know what, like I assume the cannabis goes away, and I'm not going to overpay or provide that higher bump in valuation. And then we'll underwrite a short-term senior mortgage at 75% LTV on the non-cannabis valuation, which is critical
Mm-hmm.
because
Yeah.
if we run it on that valuation at cannabis levels, well, if all of a sudden cannabis struggles and that tenant fails, then I'm now trapped into finding a cannabis tenant that wants to pay a lot for that space where we look at it and say, you know what, it's a lot easier to open a wider net and find a coffee shop for this in this example to come in place of the dispensary.
Yeah. Yeah. And that is one thing about, especially here in Washington or in Tacoma, Seattle area that I live. There are a lot of dispensaries, and because there's a lot of dispensaries, I see them close down all the time.
Yeah.
And they come, they go, they come, they go. And I just, it just seems like a very volatile um, tenant to have,
Yeah.
in your space. And so it would make sense. You're not underwriting it as a cannabis shop. You're underwriting
Right.
it as a commercial retail
Yeah.
space, period.
100%.
And if you get a cannabis tenant, that's great. If not, then you still have a space.
100%. And that's the unique aspect of what we're bringing, because really our investors get compensated for the risk of cannabis without actually taking that risk. And
So how
that's the
much
magic.
on the leasing side? How much more do you get? Are these triple net leases that you rent these spaces out for, or is it gross?
Yeah, and so these we're not doing a sale leaseback. We're simply underwriting a mortgage, and so for
Mm,
us, we're just providing no different than a mortgage on your house. So
hmm.
we're providing you financing either to buy a building or retrofit that building. And again, for us, we assume, and the easiest way I think to understand it is, let's say you and I go out and we buy a cultivation, when an industrial building for $2 million, and we put 6 million into that. So in our mind, that building is worth $8 million, right? We put six in and bought it for two, and that 6 million was used for HVAC, irrigation, lighting, high tech security. And there were firms in the market that would come in and finance that with a value close to 8 million. But going back to our alternative use valuation, we come in and say, you know what? We assume cannabis goes away. So what's the price per foot that we could lease that? And so maybe we underwrite that at 2 or 2.25 million. And so we lose a lot of deals because of the conservative nature, but also we've never had a default in the portfolio. And that really is the crux of it, is that we have a very, very stringent and strict conservative underwriting status. So today since we launched back in 22, we've financed 28 properties across 5 states. So we're in California, Colorado, Ohio, New York, and Michigan. And we'll put $23 million to work over the next, call it 3 weeks. We're in
Oh
the
wow.
final term sheet. So that'll add Arizona and Nevada. And then we have another property in California that we're underwriting as well.
Wow, crazy. So talking about metros,
Mhm.
cannabis is unique in that you can't place it everywhere. There are some states where it's not legal. I
Mhm.
actually don't know what states those are. I thought it was everywhere, but I think you said 38 or something like that.
Yeah. So, well, technically it's 39, but the state of Nevada passed last year, but now it's in litigation. So I don't know if they might reverse that.
Got it. So, in the United States, across the entire breadth of the country, what
Mhm.
are the markets that you see the greatest opportunity for the cannabis sector?
It's interesting because when you think about a market, so think about just basic supply and demand. So what we're doing is financing a piece of property whereby the tenant is either growing or selling directly to the consumer. And the states generally, for tax reasons, want to legalize because there's a whole lot of tax money and revenue that can be generated. So when a state goes from zero to medical, which is generally what happens, now you have a large market because now you're selling medical cannabis. But really, the sweet spot is when a state goes from medical to adult use or recreational, and your total addressable market in that point balloons. So we
Mm,
financed, as example, we financed five dispensaries in the state of Ohio before Ohio went recreational. And Because of the lack of capital, we're also able to negotiate additional upside, whether that's penny warrants in the operator, whether that's a profits interest on the sale of the property. So there are ways that we can get unique to add additional upside for our investors. We had three of those properties that sold since we underwrote that deal, and it's been less than 3 years. That generated anywhere between a 32 and a 65% IRR over that time period,
Damn,
which is crazy.
that's
And that was
great.
just and that's just for a senior mortgage at
Yeah.
70% LTV on the non-cannabis value. So with the lack of the again, going back just to the basic fundamentals, huge growth, lack of capital, lack of institutional players, that equals opportunity for investors.
Interesting. And so the real opportunity is when the state goes from medical to recreational. What states do you see being next up,
So
next up?
yeah, we had 4 states in the elections in November that had cannabis on the ballot. That was North and South Dakota, Nebraska, and the state of Florida. Florida was a big
Florida,
setback.
really?
Yeah,
I would
yeah.
expect them to be recreational already.
You would, right? And Trump even came out and voted positive, but they needed a 60% majority to pass. They got 56%, so they fell short.
Oh, huh.
So cannabis is legal on a medicinal value in Florida, but what's unique about Florida, and Florida has the opportunity to become the largest cannabis market in the world. So right now there's 22 million or so residents in Florida, but unique to Florida is you have 145 million visitors on an annual basis, and
Hmm.
that is a huge market for cannabis as well as pretty much everything else. And so we look at Florida maybe coming back to revisit state of Pennsylvania failed Governor Shapiro. If you look at the state of Pennsylvania, 5 of the 6 bordering states have recreational cannabis. So I live in Philadelphia. I can go right across the bridge to New Jersey. I can go up to New York. I can drive down to Maryland. On the western side of the state, you can bump over to Ohio. And if you think about the loser in that equation, it's the state of Pennsylvania because they don't get the tax revenue.
Yeah.
And speaking of tax revenue, these numbers are insane. In 2023, $4 billion of tax revenue was generated on the sale of cannabis.
Wow.
And think about the social programs, schools, roads, infrastructure that can be used for. Because if I'm a governor, I can't raise taxes, right? If I
Yeah.
raise taxes, I lose my job. But if I legalize and generate a big bucket of cash from taxing, that's more benefit to the state overall.
Yeah. Yeah, that goes into a whole political thing. I personally think that all drugs should be 100% legal, and then we can have, systems in place. I feel like
Yeah,
it would just make the entire process safer, and it would bring in revenue where there is none. And so, but hey, that's
100%.
for another day.
That's a
I'm gonna,
different talk.
yeah, I'm gonna take that opportunity to push us into the quick question round. Are you ready?
Yep, sounds good.
All right. Starts with education.
Mhm.
Could be any form, could be a conference you've gone to, mentorship program you've been a part of, movie you've seen, book you've read, whatever. I just need 2 recommendations, one for general life wisdom, and then one for business/real estate.
Yeah, business and real estate. I'm a big fan of the conferences we go to, and I'll name a few. Best Ever
Mm.
conference in
I
Salt Lake City
still,
here in
I
a
still
couple.
want to go. I haven't gone yet. Everybody says I need to go, and so
It's
maybe this
it,
year.
yeah, they do a great job. Another one is Limitless,
Mm.
which we did last year. Both of those conferences, highly recommend. You get to meet a lot of like-minded investors. You get to learn a lot from a number of different sponsors and strategies. So that would be on the conference side, and on the kind of book or learning side, I'm a big proponent of psychology. And so if you haven't had the opportunity to read Influence by Robert Cialdini, that's a great book. And all of Malcolm Gladwell books are spectacular. So I'm always interested in what makes us do certain things and also what happens in the world around us and what causes, like, for example, in the tipping point, what causes something to be an epidemic, good or bad? What causes that tip where some things don't and other things do. So
Yeah.
I love learning about that.
Yeah. Yeah. I used to love Malcolm Gladwell's books. I
Yeah.
feel like he put out a good number and then he just stopped writing. And he put out, there was like three, there was like What the Dog Saw, Tipping Point. And there was one other, I can't remember what it was called, but he put them out in pretty quick
Yeah.
succession. And I read those all and I loved them. And then he just didn't put out anything. And I haven't read
Yeah.
anything since then, but
He
definitely a good.
He just came out with an updated book called Revenge of the Tipping Point. So
Oh,
it's Tipping Point 2.0. So he's taken what he learned back there and applied in real life and kind of came back. So that's good for the weekend read.
yeah, I'll have to pick that one up. All right, going on to the next question. This is for your younger self. Let's go back to the Chris who was just getting started so many years ago. Go back to him, look him in the eye, give him one piece of advice moving forward.
Biggest thing for me is don't be afraid to take risks. So the first one is don't be afraid to take risks and understand that with that risk, it's going to take longer and it's going to cost more than you anticipate. But the big thing for me is if you have a dream, if you have an idea, go after it, especially if it's a passionate idea and dedicate all of your time and energy to make it successful. So don't give up.
That is good advice. And I like that you mentioned it will take longer and it'll cost more. And I
Yeah,
would say, I would add in there, it'll be harder than you expect.
100%.
But it is always worth it. But that it always does get me how when I set a goal and I start going after it, it always takes longer, it always costs more, and it's always harder than I thought. But you can achieve it. You just got to keep going after it.
And people will tell you you're crazy, right? I mean, nobody comes up and says, "Hey, yeah, this is a great idea," and then day two, you're uber successful and everybody loves you. Like you're gonna have your setbacks. You'll have people that don't think you can succeed, but just believe in yourself and see it to fruition.
There you go. All right, next question is about finding deals. It all starts with getting in contact with the seller and penning that purchase agreement. So, for you, what is your favorite way to generate leads and find new deals?
So we're very big. So it's a little bit unique in what we do that we're one of the few lenders or financiers in the space. So we see every deal in the market through our network of brokers, accountant, lawyers, consultants, repeat borrowers, and then all throughout the day, I take inbound calls. So we don't really have to do too much on the marketing side for deals because our phones are ringing throughout the day. So we
It's a good
see
problem
every
to
deal
have.
that occurs. Yeah, it's great. And what's really beneficial to our investors is that it gives us kind of the view that we can sort through all these deals because in cannabis and just in real estate in general, there's no shortage of deals. There's a shortage of good deals. And
Mm,
so by having access and limited competition, we can be very selective in those deals.
yep. All right, next question. We've kind of touched on it a little bit, but I'm going to kind of rephrase it here. The United States is a huge place. There's a lot of opportunity. Give me the single metro, the single city that you're most excited about investing in today.
Yeah, the single city, it's a little bit harder on the cannabis side. I mean, we have a lot of exposure in the Sacramento market in California. But in the large urban areas, we tend to not traffic as much because if you think about it, if I'm financing a building, to underwrite a deal, it takes the same amount of work if you do $1 million deal or a $20 million deal. So we'll look at some of your larger grow houses that might be 5 or 10 or 15 million. And those are not in downtown areas. So they typically tend to be on the outskirts of the city. So we're, when you strip out that cannabis and you get back to the basic real estate math on this, it's the standard location, proximity to highways, demographics of the population around the area. Is it concrete slab? What are the wall? What's the proximity to power? So because we're underwriting it as a non-cannabis building, going back to the basics is extremely important to ensure that we have that safety net in place.
Yep. Yeah, we mentioned this so many times on the podcast is never scrimp on your due diligence and never waver on the criteria you set up for yourself. It's so tempting, especially when you just want to get a deal done. It's so
Yeah.
tempting to say, "Oh, we can ignore this piece of our due diligence criteria." Just because it's not that important, but it is. It's always important, and never give on any of your criteria there.
Well, they always say trust but verify, right?
Yep,
Don't skip that verification part.
absolutely. And that leads us to the next question. This is about lessons learned. Not every deal that we get into goes the way we expect it. In fact, many times something goes wrong and we get to learn a lesson. So, what was the
Yeah.
deal that you did that went a little bit sideways? And then what was the lesson you learned from it?
Yeah, well, knock on wood, we haven't had any deals that have gone sideways, so it's hard to comment on that. However, from a kind of a different point of view, every deal that we get into, we assume it goes sideways, right? We assume because we're debt managers, we assume the worst case scenario. And what are the and a lot of what we have is our own capital in these deals. So it's the basic, how do we get our capital back? How do we get our investors' capital back? How can we underwrite with a worst case scenario that is cannabis goes away, um, COVID comes back, you have some pandemic, like what's the impact and the ability for us to hold on to that asset? Because although we're underwriting these loans for 2 to 4 years, in a worst case scenario, we have to step in. The immediate hit to the fund would be all of a sudden I'm no longer earning interest on that mortgage. But the longer term benefit is that because we didn't overpay for that particular property, it might take 2 months, 3 months, 6 months for us to re-tenant that property. But we feel confident that our valuation metric is so that we can find a non-cannabis tenant in there rather quickly. I mean, ideally, we keep a cannabis tenant, but we're not beholden to only have a cannabis tenant because of the underwriting.
Yep. Goes back to the underwriting. All right. That leads us to the very last question. This is for the listeners. You've given us a lot to think about. I'm sure people want to reach out, get in contact with you. This is a two-parter. Where can they find you? And then what can they expect when they reach out?
Yeah, absolutely. And easiest way to find us is online, mj-reit.com. So www.mj-reit.com. Follow us on socials and LinkedIn. So that's the easiest way to get in touch with us. I would encourage everybody to, if what you hear is interesting, please sign up for our newsletter. Feel free to contact me directly. All my contact information is on the website as well. Happy to have individual conversations, but when you think about really what it is that we do, our main focus is providing investors passive income and stability of principal. And if a passive income of 10+% annualized on a monthly basis sounds attractive, we'd love to have a conversation.
Perfect. I'll put that link in the show notes. So if you guys want to reach out, all you got to do is click the little more in the description. It'll pull down that full description, and there you can find Chris's links. All right, man. That wraps it up. Thank you very much for hopping on the show.
Yeah, Gabe, my pleasure, and have a great weekend.
Absolutely. For everybody who's with us today, thank you guys for showing up. You are the reason we do this. So if you guys have any questions, reach out to me, Gabe at the realestateinvestingclub.com. If you guys want to support the show, just leave us a review. Other than that, I hope you guys have a great week. Keep rocking real estate, and I look forward to seeing you on the next episode.